officially kick-started the new year yesterday. It was the first Monday for calendar year 2025, and it has to be said there was just not Monday blues. It was all red all throughout. What looked like a quiet start tumbled, and how we finally closed in at the session lows, and quite a bit of pain was being felt, especially on individual portfolios. Pretty much across the board, you had selling coming in, just a few odd dots of green from IT, which have been quite battered off late in any case. So strong selling pressure at that 50 DMA mark for the index. We've seen the biggest single day fall in about over 3 months, and that's what I'm talking about, the Nifty alone. Look at the individual stocks and the kind of damage that they saw in trade. HDFC Bank, Reliance, they were the biggest drags in trade. FI longs are now below that 20% mark for a 8th consecutive session. So no FI support. Smids as well are getting quite clobbered. In fact, they too saw a decline for a second consecutive session. I don't know how to explain what happened yesterday.
You cannot point it to a single, factor. Some thought it's because of this entire virus. Some thought it is because of the banking numbers. Everyone thought it is because of FI selling. And the bottom line here is that the market yesterday took it on the chin. That, I think, is the bottom line here. The factors at play were randomized and the weakness in the market essentially was exposed. What does a ugly Monday do to market setup? And I think the market setup, which was looking decent last week after that big Thursday and okay Friday, has got challenged. When it appeared that we could be off to a good start, yesterday's shakeout in a sense could really threaten to change the market orientation. So I'm not even getting into the collateral damage what the market has seen. The bottom line here is that we've closed below key technical levels. The leadership which was supposed to come in banks, that has got broken. And whether it is this fear of where interest rates would move in terms of central bank policy action, will FI selling intensify, will the virus impact magnify, whatever may be the underlying factor, the technical weakness in the market yesterday has got exposed. And suddenly, for a market where everyone thought that we were out of woods and we are off to a good start for 2025, I think for the moment that template has got crushed.
Yeah, because the biggest question everyone was asking was, what is the reason of the sell-off? Because you can't point it out to the yen carry trade unwinding, because the Japanese market for now is of course up 2.5%, and globally as well we didn't see any major nervousness in the US markets. The Nasdaq was up 1.25%. S&P was well in the green with that 0.5% uptick. So that virus scare is something perhaps which is only impacting the Indian market. That was the jokes doing around that it's only India which is getting impacted, neither China nor the rest of the world. It's our sentiment which was broken and nothing else. Of course, if you look at the oil prices that have retraced a bit, that's come down to $76 per barrel. But the other big headline that we're tracking globally was the fact that dollar had retraced quite a bit. It's closer to 107 now. So one of the big reasons of the FI sell-off or FI outflow has started to reverse a bit. It's still very elevated. Let's not deny that, 107, but nonetheless something that we are watching out for. And that perhaps was the reason wherein the Nifty has entered the correction zone yet again. That's how we're starting off the year. Nifty is down over 10% from recent highs. Bank Nifty is down 8%, and the mid cap and the small cap category also down 7 to 8%. But the big question now, Nikunj, of course, is what is next from here on? Given the fact that the F&O positioning seems to be on the lighter side, is it possible that we could see a sharp reversal as well?
See, Anisha, this entire virus impact only impacted India. Nothing in the world, like you mentioned and like we were discussing yesterday, that the virus has originated in China, but Chinese markets are not, shaking out. Nothing's happened in any of the other major markets. So it was a very sentimental kind of an impact which hit the markets. Now, Nifty is down 10%. And small cap index is down 7%. And yesterday's price action, in a sense, was the first time we saw unwinding in the mid and the small cap stocks. So my sense is that the downside in the Nifty could be limited, but the downside in the small and the mid cap stocks, I think, could be very large. So we are in for some volatility and some more shakeout in small and mid cap stocks, because yesterday for the first time we saw that things were things were shaky. Then you look at large cap stocks. See, India has underperformed the world markets massively. Valuations are not that stretched like they were. World is in a good groove right now. It is that nothing scary has happened in the world. So I expect that looking at the positioning, which is FIs are massively short, India has underperformed. You don't have anything large in the global market. These are all assumptions. What will happen to Japan? What will happen to Fed? So once things start settling, at least on the global level, I think Indian markets could catch up, and within that I expect large cap to outperform. I'm not sure, Ganga, about small and mid cap stocks right now because we've seen only 1 or 2 days of collateral damage. Frankly, for an index which was up 26% last year, the small and the mid cap space, they are off by only 7 to 8% from the 52-week high, which means the scope for that end of the market to correct is actually much higher. And looking at the the energy in the market is not there, the commitment in the market is not there, volume in the market is not there. So this is the time where you would say that's a happy hunting ground for anybody to start buying small and mid cap stocks.
Yeah, and the pain is being felt across that space as well.
If you like this video, then like, share and subscribe to ET Now.